What's up, everybody? You are watching the Stock Market Brief Show. My name is Michael Silva. The moment that you've all been waiting for is finally here. Fed Day and some more macro data drops coming too as well. Going to be creating a lot of volatility in the market. We're going to talk about that in today's short and quick update. Make sure to hit the thumbs up button if you haven't done so already. That right there is a thumb. It's greatly appreciated. Subscribe to the channel if you like technical analysis, intermarket analysis. We're going to get right into it. First and foremost, we have a new month coming up starting tomorrow, February. Yes, January was a great month in the markets. S&P 500 finished up 6.18%. Hallelujah. Now we have a new monthly expected move right there just above that 4,200 and right back down here at about 3,900. We did finish outside of the monthly expected move by a little bit there in the S&P 500. We had that quarterly expected move in the dash line at 4,200. We're back above that monthly 5 EMA. You can see we really just been chopping around here, up, down, up, just for the last 3 months, right? Each candle represents 1 month. If you take a look at the Qs is sitting right there on that quarterly expected move. And if we take a look at the new monthly expected moves, we're just above 310, and below that is about 278 to the downside. You can see for the last 3 months also, just a lot of chop going back and forth. Same over here. Oh, and by the way, it finished up 10.64% to start the year off. So a big move there. IWM was up 9.82%, right there at about that quarterly expected move. If we want to get a little bit higher and hit this upper monthly expected move, the new one is above 200. Below us is 180. You can see we're right there near that red shaded line coming into the other portion of it. This shaded line represents the bear market, right? So 20% measured, that's what we're using as far as bear market goes. 20% from the peak. If you measure it down, it brings us to right where we basically are right there. Now, how did the 11 sectors finish off? Well, consumer discretionary finished up 15.13%, and then communication services finished up 14.7%. Down there towards the bottom was the risk off assets, right? Consumer staples, healthcare, utilities. So all three of those finished rather flat to slightly down on the year. And if you really break this in and look at a heat map year to date, you can see that the big movers such as Tesla, right, that's big consumer discretionary, is up 40% to start the year. Now this is coming from very depressed levels and we're getting a reflexive bounce, and we haven't actually even seen some sort of consolidation really, or pullback, anything like that. So this move obviously has to be watched very closely there. You have Amazon up 22%, Google 12%, so not as much, but still great. And then Meta right there, you can see, is also a nice big reflexive bounce there, 23.79%. And then obviously Nvidia was another big one there too. It's up 33% for the year thus far. Now, going into tomorrow, we have a lot of information dropping, likes of which of the Fed press conference, and then we also have ISM manufacturing, we have JOLTS, and we have, obviously, Jerome going to be talking there too as well. As far as the rate hike goes, it looks like we're going to be getting the 25 basis point rate hike. At least that's the probabilities, a 99% probability. Can he come out and, surprise us? Sure, yeah, maybe, right? But there's a 99% probability we're just going to get a 25 basis point hike. And then after that, in the March meeting, we'll get another 25 basis point hike. That's the probability. And then we hold it. And then towards the end of the year, we drop it 25 basis points. That is currently what they're looking at. But we'll see what Jerome has to say after seeing a massive move back into risk on assets. Now, as we head into this market environment, or all these macro data drops and Jerome Powell talking, I want to call out that the RSI is still getting very frothy on the NASDAQ Composite Bullish Percent Index. Remember what we talk about overbought and oversold. The NYSE Bullish Percent Index as well, it is just cranking up there. It's at a 78.63 reading. Technology sector is also up there too as well. Go figure, right? We've been seeing those big moves. And then if we take a look at the financials, it is moving into that overbought condition there too as well at 71.36. If we take a look at the S&P 500 as far as the weekly expected move goes, that brings us to around 4150 and below us to just about 3950. So as far as the week goes to date, right, we had a move down, we had a move back up. So we're up positive slightly on the week. It was a pretty bullish looking day today with some strong volume. So we'll got to look now into what may be expected as far as the implied move for tomorrow's data drops, and that's going to be a big one. So we're going to look at the SPY. Now, the SPY is looking at a plus or minus $5.3 move just tomorrow, okay? I'll show you how big of a move that is, but first, yesterday we talked about this falling wedge pattern, and you can see price was expanded, price contracts, and guess what? We did that U-turn, which we had discussed, right? Price can break down, wait for the U-turn potentially, and play it upwards. Well, guess what? We came up, we consolidated, we shot higher, we mooned, we celebrated, and the RSI now at this point is getting back into that overextended territory, heading into all these data drops. So just be aware that we may need some sort of consolidation, pullback, etc. to be aware of. Now, if we do start popping up higher earlier on, this would look like we still have a continued negative divergence there too as well on the price momentum oscillator. So how big is 5.35 move? Take a look here. On the SPY, it'd be 411.80. So mark that on your screens to the upside. And right, this is 68% probability. So we're just dealing with probabilities, okay? This isn't like 100% accurate, obviously, but 68% probability. Price tomorrow will land within this range, so it's basically telling us, hey, there's a lot of volatility packed into all this data. It could potentially take to the downside, right? And we got to look at 401 right there, 0.10 to the downside, which is just about this prior low right over there. Okay, so that's what we'll be paying attention to going into tomorrow as far as levels go. If we take a look at the Qs, this little wedge pattern here, right? We U-turned through that 5-day moving average. It held as support, right? This is why I say, don't get bearish until this 5-day moving average starts curling over and you see something like this and you see a series of lower highs and lower lows. This right here could be the start of it still, right? We have a high, we have, a low, right? And we have a higher low, right? A low, a higher low, right? If we just keep going like this, it's like a bouncy ball, right? Boom, boom, just stair stepping up. But as it stands right now, this right here, if this doesn't take out this high, and then we see this low taken out, so if it comes up or takes out like this, like I wouldn't just short right here if it was a strong move down. What I'd want to see is it to bounce up, maybe create another lower high, and then, do something like that, and then crack down while this starts turning around. So it takes a while, right? I mean, typically it takes a while. Tops, take a while to form. Even bottoms take a while to form. And you just got to be, patient as to where price came from. A lot of people right here on this move, actually, no, a lot of people on this move, I called out right up here at the top of this channel, and people were, I got a little bit of feedback saying, basically, well, you should be looking to go long or add more exposure. And it's like, why would anybody want to add exposure on a very strong move to the upside? So my point is, if you're managing risk, you don't enter in up here. You want to wait for the pullback and a consolidation, and you got to mark out areas, and that's why we talked about this yesterday, and we started moving up to the upside, okay? If we take a look at the expected move for the Qs, it is approximately the same size, but it's bigger given the fact that this is a not expensive as a product. So we're looking at a $5.4 expected move, which could take us up to, ding, 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 a psychological 300 level to the upside, and then we have 289.26 to the downside. Okay, so this is all that's going to be on people's minds. I'm going to wait for the market to digest. In the Patreon community that I'm in, I've been sharing a lot of, mainly talking to them right now, but you can listen in if you want. I'll talk about these zones momentarily. In the trade ideas, I've been posting just a bunch of long positions, but you got to be aware, and some of these triggers are hitting, they're looking decent. You got to be aware that coming into this type of volatility, you can get a big shakeout. You could go in our favor to the long side. We don't know. So in my perspective, I always start with small positions, and then I decide, hey, is this still holding? Are we going to, is it going to consolidate more? Is it going to break out and then pull back, and I can add a little bit more? But I start small on my positions. I never go over, because I know that walking into these reports, you can get hit very, very easily and get out. And it's all about managing that risk, okay? So if you're not familiar with the swing trading stuff, I only charge $9 a month. If you don't want to pay monthly, just do annually. It's $90. You get an entire year. I give a lot of information out for $9 a month. Trust me, I go to Starbucks almost 3 times a week to do some work out of there, and 1 cup of coffee and a sandwich cost me more than $9. Okay, I give trade ideas. I give my watch list of just a bunch of different stocks that I'm looking for price to tighten up. I give weekly expected moves for about 40 products. You can do this yourself, but I track 40 products and I share it there. I give updates on the zones, which is not only these products, and where it gives you it's a help to manage risk of where price can be. I'll talk about it momentarily. But for the zones, I also give out it's just so these products, but I do it for the entire S&P 100, all those products. I do global products, I do commodity products, I do fixed income products, I do volatility products. I'm telling you, it's a lot of data, and that's dropped every day, okay? And then despite that, I also give out my stock market indicators too. Yeah, so a whopping $9. If you find value in this, come join. It'd be great. And then obviously I have a community that's badass If I do say so myself, they're great in there. If we take a look at the zones, what do I notice? I'm not noticing really any green on the screen here as far as the ranges go. If you want to know what this is, let me draw it out for you. So basically, think of the zone as you have a, an upper level, you have a lower level, and you have a midpoint, okay? So you have upper level, and then you have you have a low, a mid, a high, and then you have a close price, and then it says upside, downside, so it tells you where price is within the range overall. So if you think of it as just a Bollinger Band, in a way it's much more technical than a Bollinger Band, right? It works similar to kind of that, but if price is up here towards the upper range, it's going to be colored red, yay, right? So darker red means it's closer up into that area. And if that is the case, it means it's, it could be not the greatest place to go long. You might want to see a pullback to the lower portion or even to the midpoint, because sometimes midpoints can act as levels of support. So when you take a look at this, what I'm noticing is XLY, consumer discretionary, it has, within the zone is saying I have 1.64% to the upside level, 8% possible downside. So it's red right now. You can see as far as the close goes, 148.70, and then the high is at 151.14. Now these are dynamic, they're constantly changing, but it does let me know that, hey, consumer discretionary is getting a little heated, and it's just a quick way to really kind of visualize that. Financials getting a little heated. We talked about the financials BP chart, right? Financials BP charts getting a little heated here too as well. So we got some things lining up. Retail, right? XRT is a retail ETF. That's getting a little heated, so be careful there. We have also XLB, right? Materials. And then we have some lighting up light red like the SPY. And then we also have the IWM too. The IWM made a pretty large move. And that's all I got for you guys on today's episode. Just be aware, we got those macro data drops. The market's kind of like pricing in, the Fed, being dovish. Who knows what they're going to say or how the market's going to respond. So I'm just going to be patient, and I'm going to look to see if any of these expected move levels are hit going into tomorrow's trading session. Have a wonderful night.